Hi everyone. So this is session one. In this session, I'll just explain you what actually the stock market is, and you'll be also knowing few terms, not many, but you'll know what actually US stock market is and how it functions. And one thing I'll explain you is S&P 500, which is also called as SPY. It's an index fund, and which brokerage I use, and what are the different ways we can earn from trading, and what are the types of trading, and what actually the trading is. And also I'll explain you what IPO is, initial public offering, how a company actually comes into the stock market, and how you buy stocks, and what does that mean, right? All right, let's start. So these are the things which I'm going to cover in this session. So as I already said you, I already sent the context in the teaching sessions channel. It's like basically 8 or 9 classes. I can increase it based on how fast we finish this, but we are good to finish this in coming 7 or 8 weeks. Basically 8 classes each week, one class maybe, or even more. So about me, there's nothing much. So actually, I don't have any financial degree. So whatever suggestions I provide on my Discord or YouTube or anywhere on my Instagram, this is basically coming from my research and experience. So I started trading back in 2020, in the period of Corona time. So I'm a master's graduate. I studied computer science in University of Dayton. So at that time I started this trading thing, and eventually somehow it's decent and good right now. So I started providing this advice and you know help to other people too. So my plan is just to create a good trading and profitable trading community with some knowledgeable people. So that's the thing, that's it. So what actually the stock market is basically, back in 1600s there is a company called as Dutch East India Company. So this company used to create some goods, right? So like gold or some spices and kind of silk, wool and ceramics, these kind of things. And what they wanted to do is they want to export this. They want to export this all the way from somewhere in England to throughout the world. So they started exporting this. Why do they export? For money, right? So they wanted to make some money, so they started exporting their goods, and it was going well, right? But in 1600 the mode of transportation mostly was on ships, or that large container kind of ships, right? So they started sending those to different parts of the world. What happened is it took a lot of time and a lot of effort, and it costs more money too, right? And the availability of labor or ships or whatever mode they are using is very less. Even the goods they can manufacture, but not in large scale. So after few days what they thought is, why can't we export our goods throughout the world? So for this they need some money, right? So for this money they started advertising their products. Like they said, we have this, we want to advertise it, we want to export this, we want to export this to different parts of the world. So we are looking for money. We need some money to perform some massive operations, because for Dutch it wasn't cheap at that time. It was very difficult to, right, through water, and there was no proper, in 1600 there is no air transportation to send goods mail, right? So they focused on three main sectors, that is private citizens and few individuals and large economies. Large economies may be anything, maybe a group of people or group of community or group of businessmen. Private citizens can be anyone, and individuals like you and me, they used to go to random general store or an coffee shop or a bus stop. They used to give pamphlets like, we have this business, we are trying to improve our business and we need some capital, right? So people started putting money in that, in their firm, in the Dutch East India Company. They started giving them money, and they gave their bonds in return. They said that once we finish this exports, we make money, so we'll share our profits, right? So for example, one of the individual contributed like $5,000, for example, $5,000 to them. So they have included $5,000 and made some business out of it, and they have given him return like around 5,200 or 5,300. The extra 200 300 is the profit share he is getting back for helping them to generate the capital, right? So in this way, they were able to afford like grander voyages. They started selling all over the world, and they started expanding their business. They were getting more profits, and they're sharing some profits to the private citizens, individuals, and large economies who actually help them to increase their capital for large economies, right? So modern stock market is similar to that, right? You have a company and you need to improve your business and you need some more money, so you still sell your stocks and get the capital, right? But the thing is, now the stock market is completely different. You have some people who actually pursue their careers in stock market, and there are some schools separately only designed to learn stock market for even 5 or 6 years in your secondary education and however you wanted to, right? And the few television channels which only telecast about stock market, right? It's very different compared to the ancient and early period age, right? And now how do companies and investors use the market? Investor, you and me. Companies, someone random. Let's consider Starbucks, right? If Starbucks is a company and their product is coffee, right? Now what they do is they start a business that doesn't need, they need to own shares, or they need to be a public offering company, or they need to somewhere, it's not mandatory that you need to find every business in a Robinhood or anywhere to buy their stocks, right? But if you have a good coffee, consider Starbucks wanted to become public offering. That means they're offering to the public their business. Starbucks is giving the public offering. That means their business is going to public. That means you can buy their stock and you can become a business member of Starbucks. So they try to advertise their coffee. They say our coffee is good, right? And we have been doing good profits over the years, right? In stock world, the business profits losses are calculated quarterly. That means every year they report the earnings 4 times. Every quarter they report their earnings, where you can see their profit, loss, and everything. Why do they report earnings? Because it is a public company. That means you are buying their stocks. That means you are the business of owner of Starbucks. So they have to report their earnings to you, and you have the right to view their earnings, and it's your decision to continue or sell their stocks and invest in another company, right? So they advertise. Once they advertise, they get the investors, right? Even though if you started a new coffee shop, your coffee tastes good and you have a good amount of confidence on yourself that you can grow your company, and you advertise your coffee and people are there to invest in your company, these people are called investors, right? Once you get these people, you register for an event called as initial public offering. That means you are going to a public offering, your company is open for the people to invest, and that is the initial step. So it's an initial public offering, right? And now the investors who are impressed by your business model will be sponsoring for the launch, right? And also there will be an estimated price, right? For your coffee shop, let's say you are the owner of Starbucks, and now you have few investors, right? A, B, C, D, E, F, 4, 5 investors. They have sponsored everything, and collectively you and those 5 people decided that, let's say your Starbucks is now valued at $25 per share, right? Now you release it into the market. Once you release it into the market, it is available for me and everyone. Then we start buying your shares. Those money will be used as a capital and investment thing for your company, right? With those money, you can improve your business. You'll increase your profits. Your share value grows, right? Your company profit is growing. Your share price is growing. So the person who has bought your stocks is also growing with you, as is your business owner, right? That is the shareholder meaning. And once you buy a stock of any company, that makes you the business owner of that company. If you buy 2 Tesla shares, you are a part of Tesla, right? That means you literally have a share in your Tesla business, right? All the Tesla company, in the Tesla company, you are the business owner. Doesn't matter, it's like $5 or $10. You're the owner. That's a general technical meaning, right? And how this stock price grow and decrease, increase and decrease. So basically, if you create a coffee, if you if you start a coffee shop and you put some coffee using something and you say, I want investors, you can't really find them, right? So you need to start something and you need to earn some brand value for yourself, right? So how to earn the brand value? For example, you say you cook chicken well, you make good chicken curry, right? So that is a supply. So whatever product you have, that is a supply. Now you can't literally go and sell chicken curry to the people who don't eat chicken, right? So there is no demand there. But you can find a community or a place where people eat more chicken. That is where the demand is, right? Demand means people want something. The something is with you, which is called as supply, right? In the same way, when there is a supply, you need to create a demand. When there is a demand, you need to create a supply. That's as simple as it is. When there is supply and no demand, you can't really excel in your business, right? And there is demand and people need something and there is nothing available for them in the market, there is no business, right? So as long as supply and demand works equally, you can grow in your business and you can create it, right? The same thing, general example, I have the information about the stock market, that is my supply, and people want to learn from me, that is my demand, right? So that's how my Discord business is created. The same way, that's a general example. So how IPO works, right? First of all, let's consider an example, Nvidia, right? Nvidia stock first initial public offering pricing in Jan 1999 was $12, right? The Nvidia creator, like original founder with 4 or 5 investors, thought that Nvidia can be valued at $12 in 1999 Jan, and it was available for public right then. Today, stock price of Nvidia after the split was around like, now it's like 130 or 140. Like it is a 1/10 split. That means stock split is nothing but when the stock price keeps on growing, they'll do a stock split. That means Nvidia was around $1,100-$1,200, right? They have done a buy 10. That means if you own one share, the next day it will be 10 shares and each share will be valued 120. Why they do that is because there are people who want to buy shares, but 1200 is very costly for them. So now they can buy 121 share. So it won't be any loss for anyone because the one who has one share at 1200 will be having 10 shares at 120, right? So if you think stock price today of Nvidia is like around 615, right? Back in October it was 400. For suppose if you buy 10 shares of Nvidia, it will cost you 400 into 10, that is $4,000. This $4,000 is your investment. This $4,000 is your investment and this is the capital for Nvidia, and you are the business owner of Nvidia and your shares are 10, right? And this share is kind of subscription, right? You pay money $4,000 and they're giving you a subscription. As the company brand grows, your subscription pricing grows. You can sell them, right? Once you bought for 400 10 shares, it costs you 4,000, right? Once it reaches to 615, you sell 10 shares, it's like $6,150, right? Almost $215 per share. That brings you to $2,150 of profit. That is the business profit you have earned from owning their shares and holding them, right? When you buy shares, it's called buying. When you sell, it is selling. After you sell, you may take a profit or a loss, right? If you sell to the price for what less than what you bought, that is a loss. If you wait for it to grow, if the business is growing, if you wait for it to grow and you sell after it grows, it's a profit. And the period between buy and sell is called hold, right? The holding period is the important period. Like it matters how much you hold, because if you really invest in a good company, research well, you know company is coming up, you just need to wait for it to come up. Once it comes up, you can take the profit, right? This is actually how you buy, hold and sell, take profit and loss. These are just shares, right? And what are the different ways to earn money from trading? First thing which everyone knows is to buy stocks, right? Once you buy stocks, you become their business owner and they'll use your money in their business and their business becomes profitable. Then stock price grows and your share value grows. You sell them, you get some extra money, right? And one thing, buy calls, buy put calls, right? When you buy calls, call is an option and put is an option. Options are two ways. There are two options. One is call and one is put. When you say call, that means you are betting on a stock for the price to go up. That is called an call option. When you say put, you are betting on stock price to come down. So in options, you can earn in two ways. If you are buying a call options, if the stock price goes up, you earn money. If you are buying put options, if the stock price falls down, you earn money. So the two types of options, it is call and put. We'll be learning about that deep in second or third session maybe, right? And another thing is dividends. Dividend is the company profit, right? So I said you every quarter there will be a earnings reporting from the company, as you have the right to know them because you are the business owner. Now few stocks will give you dividends. Dividends are nothing but they have an ideal amount, right? So let's say Coca-Cola. If you own Coca-Cola shares, they'll give you like around $0.75 per share. That is a dividend value. That is fixed for many companies. You can just Google it, like highest dividend paying companies, or you can search from the Google. Like I'll explain you what dividend and equities in session 2. But dividends are the extra profit for each share company gives you every quarter. Just keep it in mind, right? You buy the stocks, you sell them, make profit. You buy options in two ways. You buy call options. If the price goes up, you get money. You buy put options. If the price goes down, you get money. And the third thing is dividends. That's a company profit each quarter you get from the company, right? These are 4 different ways. Next thing, what are the types of trading? Before we saw what are the ways to earn money from trading. Now what are the types of trading, right? So you have day trading. Day trading means you buy the stock and sell the stock on the same day. Be it an option, be it a call option, be it a put option, be it just a share. You buy it and sell it on the same day, right? And short-term trading means you buy and sell it in like short term, maybe 1 or 2 weeks. That is called as short term, right? Long-term trading, swings. Long-term means it depends on you how long. Swings means for at least an overnight thing is also a swing. But if you buy today and sell tomorrow, that is also a swing. But that is something which I call as short-term trading. But swing, actually, when you at least hold them for 15-20 days, if you buy something and you sell after 2 or 3 weeks, that is called as swing trading, right? And I said you options, you can buy options and you can sell options, right? And some people trade with price actions. To trade with price actions, you need to understand the levels, right? So I'll teach levels too, but let's keep it basic for session 1, okay? Right? On the left, you see 4 different terms, right? Profitable trader, discipline, management, technicals, right? So first thing, profitable trader. To be a profitable trader, you must understand that this is a thing where you can earn money and there is a chance for you to lose your money too, right? So profitable is someone who can actually reduce their losses. Every trading I take personally, I believe I'll lose all the money, right? When I feel I'll lose all the money, first thing I do is I'll never put all my money in it because I know I'm losing everything there, right? So I'll try to size well. That means I'll keep a lot of my money on the side. I'll use a less of my money on something, right? I'll teach you how much to use, how much to keep aside in later sessions, which is called as sizing, point position trading, and risk management, right? So I in this session, I want you people to understand that you can be profitable when you think different, right? You need to understand that losses are part of trading, right? To be profitable, simple and basic, you need to take more profits than losses. Then you will be profitable. You can't take every trade as profit. There will be losses in trading. You need to accept it. You need to take losses. You need to take profits. How well you manage your losses and profits will make you a profitable trader, right? And second thing, discipline. You just can't open your mobile and follow someone, execute it, go back to sleep or throw mobile aside and come back after 2-3 days, then again check it. And you can't. That is not how discipline works, right? If someone is giving you an option or someone is asking you to buy shares, right, they'll give you a reason. Personally, I give you some reason, right? I'm saying like I give you some technical, or I say this is creating this business, so I'm buying this. You need to know why I'm getting into this, why he's asking me to buy. So what are the levels on this, where I can take profit for this, how much money I can put on this, right? You need to maintain a journal. You can write in Excel sheet, or you can write in book or pen, or it's on you how you want to. But practice a disciplined trading behavior, and you need to be in that mentality, right? And management is how you manage your risk, right? If you start trading with 500, that means if you start trading with 500. That means 500 is everything for you. You can't come and put 500 in the single stock, right? If you come and put everything you have in a single stock and pray for it to grow, it never grows. Even if it grows, that's just a luck, right? Overnight something can happen. What if you come tomorrow and ask me what is the best share to buy? I say Nvidia, and you put $500 in Nvidia. Tonight something happened to Nvidia and they lost a big chip market has gone, or so they lost some business, and tomorrow Nvidia falls by 70 or 80%. Your 500 will become 100. Right? You can't literally put everything in the same bucket. So you need to manage your profile. If you are like around 500, you need to put only $50 or $100 in each share. Even though if you lose that 100 in single company, you still have 400 to get back your 100, right? So you need not put everything in the single bucket. So risk management is also very important. Technicals is the least important thing in trading, but it is more kind of needed, but you can actually earn money without technicals too. For me, technicals is important, but it's very less important because it's been almost like 4 years, almost 1,000 trading days for me, but I've never benefited from, I benefited. I got benefits from technicals, like I learned technicals. Actually, I take calls only based on signals and technicals, but levels and technicals, but without discipline, risk management, trimming the levels, runners, stop losses, I can't be profitable. You can get a master's degree or triple masters or 4 master's degrees from data analysis or anything, but without discipline and without risk management, you can't take profit. You'll decay even 100k account. You can make a 100k account zero in a month if you don't have proper risk management. Because technicals are something which people study based on the history, right? They can happen or may not. Every time it's may or may not. If you think every technical works, every time they go all in, they put 1,000, they make it 2,000, they put 2,000, they make it 4,000, they go on repeating it, right? So technicals is kind of may or may not. So if it happens, it's good, right? You won. If it won't happen, that's where your risk management plays the key. Like how you are coming out of it. Your trade did not work. That means your technical did not work. You need to come back. You need to take loss, and that should be less than your profit, right? If your loss is more than your profit, you're in loss, right? You need to again study it, like where it went wrong, why it went wrong. So these kind of things you need to understand, right? You will eventually learn. This is just a session 1, so I just want to give the overview. That's it, right? And I already explained you what day trading is. You buy and sell on the same day, right? Position trading is kind of creating a positions, right? You create a levels. For example, if you say Nvidia is valued at 144, you create a position from 137 to 144. Let's say 137 to 144 is your position. So every time it goes to 144, you sell. Every time it comes to 137, you buy. Again, it goes up, you sell. Comes down, you buy. So that is your position which you have created, and you do that, right? That's position trading. People often do that, and these terms are just for you to understand, and we really don't define what kind of trading we do, because all we need is profits and we just keep on doing it, right? Swing trading, which we actually do a lot, we buy today, we hold it for 2 or 3 weeks and take profits, right? Scalping is something we do in day trading, like people put $10,000, $20,000 at a time and just try to aim for 5-10% and take those $100-$200 every time they get in. So that is very difficult and it's very tough. If you lose, you are going to lose like almost 30-40%. It's going to blow your account. So unless you have 200-300k, I don't recommend putting like 500-600k per a trade and taking 200-300. In that way, you may earn profits with good technicals, but you never learn trading or risk management or profit taking techniques with that, right? Long-term trading, right? You'll buy the stock, you'll hold for 1 or 2 years. You buy the options, you hold them 1 or 2 years for profits, right? Momentum trading is kind of trading which you do with maybe news, right? Currently from past 6 months, it's more of a chip momentum, AI momentum, Nvidia and AMD, these things moving. Then you get into a crypto momentum where Riot, Bitcoin, MSTR, Coinbase, these things move, right? These are kind of momentum trading. And 2 things I want you people to understand here is cash account and margin account, right? So anywhere you trade, you can trade in two accounts: cash account, margin account, right? So margin account is something where you put some money, right? In cash account also you need to put some money. So what is this account is nothing but when you create a bank account, it's a savings account, checking account, there are certain restrictions, right? Checking account, you can't withdraw this much, or in savings account you can't withdraw this much, your daily limit is this and your monthly limit is this, you need to sell only this much. So these kind of limits in the banking, right? In the same way, when you create a brokerage account for investing, you'll have two options: either you can trade in the cash account or you can trade in the margin account. What happens if you trade in the margin account? Margin account is the basic account where everyone will be using, but we will use the cash account. I'll let you know why. Because in margin account you get only 3-day trades, right? That means if you're buying and selling on the same day, that is called 1-day trade. Again, you take another stock and buy on the same day, that is 2-day trades. Another one and you buy and sell, that is 3-day trades. That means if you buy and sell 3 times in last 5 days, that is done. 4th time you can't buy and sell on the same day. If you try to do that, you will be restricted from trading for 90 days, right? For this reason, we will be using the cash account. In cash account, you can buy and sell the stock on the same day for n number of times. There is no limit. But the catch is, once you use the money in your cash account, for example, if you have 10,000 in your account, you have put 2,000 in Nvidia at morning 9 a.m., right? 9:30 a.m. you bought $2,000 worth of Nvidia. By 1 p.m. it went to 2,500. You sell it, you get 2,500. But as you're trading in the cash account, this 2,500 will be given to you tomorrow. These are called as unsettled funds. As he's taking your cash and giving you tomorrow, he is giving you an advantage of unlimited day trading. That's it. So you can use all your money in your account and do unlimited day trades on the single day, but all the money you get it on the next day, right? In margin account, unlimited day trades is possible only if your capital is more than $25,000 and it shouldn't include crypto, right? You'll learn it once you come into it and work with it, right? So just giving you an example, the definition, that's it. So coming to US stock market, around 70% of the US population invest in stocks in US market. I can't say all of them are active traders. They may just keep investing and go out of it, right? They just forget about it, or long-term investors like that. And I said you 3-day trades in last 5 trading days. But we are trading in a cash account, so you'll get unlimited day trades, but whatever money you trade will be reflected tomorrow. Those are unsettled funds. And US market is called NYSE, New York Stock Exchange. It is in New York. It opens at 9:30 a.m. EST and closes at 4 p.m. So whatever thing you are doing, option buying, selling and everything should happen between 9:30 to 4, right? After hours until 8 p.m. What does that mean? Means the stocks even move. They go up and down after 4 p.m. until 8 p.m., right? And there are some stocks which even move 24 hours, right? If you buy something at $359, you can buy Tesla for $180 at $359, or once the market closes 4 p.m. It can move 24 hours. There are few stocks which move 24 hours, Meta, Tesla, Nvidia, these things. By the time it opens at 9:30, it can be 160 or it can be 200 based on how it moved, right? So just the basic things, you'll become more familiar with this once you keep using your account and you start trading, right? 2 brokerages I use, Robinhood and Webull. I recommend Robinhood if you are a beginner. I have the links in my Discord, or you can just see this picture how Robinhood looks. That's on left top, and Webull looks on right bottom. So you can install Robinhood. I also have a YouTube video in my YouTube how to install Robinhood, and each step by step, like what details to fill and everything, you can install from there, right? And once you install Robinhood, make sure you need to enable option trading, right? You can just find it in YouTube how to enable option trading, and that is on my Discord to how to enable option trading. And second thing, you need to switch your account from margin to cash, because we need unlimited data, right? The last thing you're going to learn today is SPDR, S&P 500 ETF Trust, right? Big name, but you just call it SPY. Simple, right? SPY or S&P 500. So this S&P 500 has like 505 stocks in it, right? A combined 505 stocks in a group is called S&P 500. So what stocks does it have is the good performing large scale companies in US market. So what happens if 505 stocks of a large scale companies are clubbed together as S&P 500. That means in America, there is NYSE stock exchange, right? You are studying market in NYSE. NYSE has a lot of companies. Good 10-15 companies, large scale companies, giving some shares and making it 5 or 5 shares to form a SPY 500 will make you understand how US market is going, right? Anytime you open any brokerage or anywhere Google, you open SPY, SPY, you look for SPY. You can study US market, stock market with SPY. If SPY is falling, market is falling. If SPY is going up, market is going up. When I say market, that is SPY, right? So when you say the market, it's SPY, and the SPY behavior is equal to the market behavior. So everything you study in the US market is based on SPY. That's it. That you need to understand. This is the first thing you need to learn. And where your 401ks, everything will be going into this. If you are saving your money in 401k investments or Roth or anywhere, they'll be putting in this. So if this is going up, your 401k money is growing. If this is going down, if your money is going down. So this is actually how the market functions, and this is only the market is like SPY is the market. So you'll learn about it more in further sessions too. And this is the end of session 1. I'll see you in session 2 where I'll be teaching you equities and dividends. If you have any doubts, you can post in my Discord or just leave a comment under this. I'll reply you. Right? Thank you all. I'll see you in session 2.